Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Also, I just want to thank everybody who likes, subscribes, and comments. These three things really do help us out very much and helps us get this information out to the broader crypto space. Appreciate everyone and love everyone. Well, ladies and gentlemen, XRP, gold, silver, and copper just got a massive signal from a world power, Part 2. If you're new here, you're going to have to go back and watch Part 1. Few see what's coming. I want you to think sitting the table. Ladies and gentlemen, we're setting the table. There are moments in history where nothing officially changes, but everything quietly does. No emergency press conference, no flashing headlines, no dramatic announcement, just a room, a deadline, and the people who actually shape financial infrastructure sitting across from each other. That's what's happened this week in Washington. A private policy meeting at the White House brought together major U.S. banks, payment companies, crypto firms, and regulatory stakeholders to discuss one deceptively simple issue: stablecoin yield. And if that sounds boring, stay with me, because historically, yield disputes are where entire monetary systems begin to fracture, evolve, or consolidate. This isn't about price predictions. This isn't about hype. This is about structure. And when structure changes, assets like XRP, gold, silver, and copper don't react immediately. They react inevitably. Who was in the room and why it matters? Let's ground this in facts. According to reporting from Eleanor Trait, sources familiar with the meeting confirmed that it ran roughly 2 hours and included 3-to-1 ratio of crypto and payment representatives to traditional banking representatives. Let that sink in. On the banking and financial institution side, representation included organizations tied to the American Bankers Association, ABA, Bank Policy Institute, Consumers Bankers Association, Financial Service Forum, Independent Community Bankers of America, ICBA, and on the digital asset and payment side, participants or affiliated representatives included Fidelity, PayPal, Stripe, SoFi, Coinbase, Kraken, Crypto.com, Ripple, Paxos, Tether, Circle, Galaxy Digital, Multicoin Capital. Also present were advocacy groups such as the Blockchain Association, the Digital Chamber, the Crypto Council. This wasn't ideological. This wasn't fringe. This was the modern financial system, old rails and new rails, sitting at the same table. I want to talk about the first signal: constructive, not combative. Remember, never throw mud on anybody. Multiple sources described the tone of the meeting as constructive, fact-based, calm, solutions-oriented, no yelling, no grandstanding. That alone is a signal in today's day and age, unfortunately. Historically, when financial incumbents feel completely safe, they don't negotiate, they dictate. Negotiation means something is shifting. I want to talk about historical parallels: Rome and the denarius. Quick history lesson. In ancient Rome, the denarius was once backed by real silver. Over time, yield pressures and state obligations pushed Rome to quietly reduce the metal content. They didn't announce it. They didn't warn citizens. They adjusted the structure. At first, nothing happened. Then prices rose. Trust eroded. The alternative stores of value quickly gained favor. Sound familiar? When governments and banks argue about yield, they're really arguing about who gets the benefit of holding money. That's what this meeting was about. I want to talk about the core issue: stablecoin yield. Here's the tension in plain language. Traditional banks offer near zero interest on saving accounts. Stablecoin platforms, backed largely by short-term U.S. Treasuries, often offer meaningful higher yields. From the banking perspective, deposits fund lending. Lending fuels local economies. Large deposit outflows threaten that model. From the crypto and payments perspective, stablecoins are fully backed. Funds are not relent into risky credit. Yield reflects Treasury returns, not leverage. Neither side is wrong, ladies and gentlemen, but both sides cannot win simultaneously without structural change, unfortunately. I want to talk about the deadline and why February matters so much. According to sources, the White House indicated an end of February deadline to reach alignment on stablecoin yield. Why does this matter, you're asking? Because without resolution, broader digital asset market structure legislation becomes extremely difficult to pass this year. So in other words, no yield agreement, no market structure clarity, no durable regulatory framework. This isn't gridlock, ladies and gentlemen. This is dependency. A notable absence, really notable absence, One detail stood out. David Sachs, the White House digital asset lead, was not present at this meeting. That doesn't imply intent, but in policy environments, absence often signals internal coordination challenges. History shows us that fragmented leadership slows reforms even when consensus exists. I want to talk about public statements, banks versus innovators. Following the meeting, banking organizations issued a joint statement emphasizing local lending, small business financing, safety and soundness of the financial system. Meanwhile, digital asset organizations like the Blockchain Association and the Digital Chamber described the meeting as a meaningful step towards resolution. Summer Merzinger, CEO of the Blockchain Association, highlighted the importance of durable, clear rules. That phrase keeps coming up, durable. Capital doesn't move into systems that might reverse overnight. I want to talk about media enters the chat. Soon after Coinbase legal leadership appeared on Fox News and clarified a key point. Stablecoin reserves are generally backed one-to-one, primarily with short-term U.S. treasuries, not fractional lending. That distinction matters. It reframes stablecoins not as speculative instruments, but as alternative treasury access mechanisms. And historically, when treasury access is democratized, existing intermediaries push back. Here's a friction point. Diamond and Armstrong. Reports also surfaced suggesting heightened tension between Jamie Dimon of JP Morgan and Brian Armstrong of Coinbase over stablecoin rewards. Strip away the personalities, and this becomes clear. This isn't ideological, it's competitive. When yield becomes visible, customers move. The retail question, who speaks for you and me, ladies and gentlemen? One participant described the meeting as feeling like two powerful sides negotiating outcomes that affect everyone else. There was no direct retail representation, unfortunately. That's not unusual, but it's consequential. Historically, systems built without end-user input tend to optimize institutions first. That's when hard assets quickly come back into focus. Why this matters for XRP, gold, silver, and copper? Well, let's connect the dots, ladies and gentlemen. When payment rails are restructured, yield access is debated. Treasury flows are questioned. Banking models are pressured. Markets look for neutral settlement layers. XRP. Money hedges equals gold and silver. Industrial certainty leads to copper. These assets don't react to headlines, ladies and gentlemen. They react to policy gravity. Another historical mirror I want you to pay attention to. Bretton Woods. In 1944, Bretton Woods didn't collapse overnight. It cracked quietly, then structurally, then suddenly. Those paying attention to meetings, not markets, position first. A moment of clarity. Patrick Witt, representing the administration's digital asset advisory efforts, described the discussion as solution-oriented and expressed confidence in resolving remaining issues. That's encouraging, but progress is not completion. And victory laps taken before laws tend to age poorly, unfortunately. Ladies and gentlemen, this meeting wasn't about crypto versus banks. It was about who benefits from holding money in the next financial system. And when the question's being debated at the highest levels without retail in the room, history suggests diversification quietly resumes. Not in panic, not in haste, but with intention. Ladies and gentlemen, if you found value in this breakdown, I'd really appreciate a like. It helps you more than you think. Well, ladies and gentlemen, this content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Well, ladies and gentlemen, if you made it this far, I do appreciate you. And you made it to the bottom of the Italian ices for the candy. So I couldn't be with everyone yesterday. With the way the markets are, it's hard to get off the phones. When I think back to the floor of the Mercantile Exchange in Building 7 when I was 15, and even as I was growing up on the floor, the open daily financial combat, the screaming, the yelling, the chaos, the confusion. There was so much at stake for everybody trading, whether they were locals, whether they were trading for big banks. No matter what, their entire lives were always on the line trading. Every trade, they put their reputation on the line. They put their financial family's situation on the line because financially they were connected to their family and who they were trading for. So that was a marriage. You had to stay so sharp and convicted with everything that you had to have this Gucci clarity during the daily financial combat, the screaming and yelling. In my mind, because I used to read those books I told you about, Dungeons and Dragons books, Lord of the Rings books, I imagined those climactic battles, or even what Roman legions were having in the first line of the 5-line segment of the combat, hand-to-hand fighting nonstop. There was zero sum for any mistakes. I think about that. That's why a lot of people getting cut up like sushi, and a lot of people are getting cut out in body bags. But I want to talk about something first today. Project Vault establishes a 12 billion U.S. critical minerals reserve backed by government financing and private participation. It's designed to counter China's dominance in rare earths. The program centralizes stockpiling, stabilizes price, gives American manufacturers guaranteed access to strategic materials during market shocks or geopolitical disruption. What this is in English, ladies and gentlemen, POTUS just dropped a $12 billion policy bomb on China's rare earth dominance. Project Vault is Washington's boldest supply chain power move yet, and it could permanently reshape how American secures materials behind chips, jets, and manufacturers. That's massive. I'm going to tie all these things in, these topics right here that are very, very important to XRP, where we're going. So stay with me. And if you're brand new here, I want to welcome everybody to our Patreon, to the membership channel, and everybody who's learning. It's fantastic to have you here. And if you're new, you're going to have to go back and watch some of the other videos. Welcome. I want to talk about silver's emergency halt of UBS China fund tied to global sell-off. Well, ladies and gentlemen, people still aren't talking about it in the context, but why the markets gravitated and gyrated the way they did over the last 72 hours of trading, okay? This is paramount to understand, again, because when we're connecting all these pieces, it really tells a story. Stay with me. President Xi makes RMB reserve currency push official. It would seem that Xi Jinping and China are accelerating their transparency in an effort to prepare the world for whatever it is they have coming out regards gold, regarding internationalization of the renminbi. I want you to pay attention. For everyone who's brand new here, we were talking about gold becoming a challenge to the treasury regime by becoming a collateralized asset that you could do projects with. That's very important. But to understand where we're going, sometimes we have to see where we've been. That's very important. And like everyone knows, I like to chart the fundamental things that are going on. Everyone who retains ourself or our organization of capacity hears me harp on these, that it's almost like they're watching a soap opera on rewind, that they can dictate this now. But that's how we navigate where we're going, and that's why we're the remora, ladies and gentlemen. Again, those are the biggest things to pay attention to. Ladies and gentlemen, it only makes sense if you could recognize that I need you to pay attention to this right now, again. And thank everyone who voted for the structure of our videos. We're trying to tweak this for everybody to get it the way they want. Silver. I need everyone to stop what they're doing and listen right here. Silver. It only makes sense if you can recognize that you can't take silver from the U.S. and bring it to China anymore, and vice versa. You can't take U.S. silver, throw it in a boat, bring it over there as easy as it used to be, because we're in a mercantilistic environment. The euphoria is from a single fund, okay? I wouldn't call it an ETF. It's a long-only fund of China, out of China. And it was the only vehicle that the Chinese had on the equity side to get into silver. It was their version of an ETF, and it was really disorientated. Every time you bought it, it went up. But there was no one who was allowed to short it. You were not allowed to short this fund. Then the fund just keeps going up when silver is going down. Think about this. As long as people are buying the ETF, it's going up. It didn't matter if silver was going down. By no means are we out of the woods yet with this, ladies and gentlemen, but it's very encouraging. So what this means is, in China, you had a fund. It was, let's call it a rogue fund. It was completely inappropriate for serious trading. And that fund attracted buying even when it wasn't able to be hedged against silver properly. So when silver went up 1%, it went up 2%. You had all these people piling into this fund, and you didn't even have enough silver exposure into the fund to begin with. And so that fund pulled away. And so with that, you started to see was a normal premium get out of hand in Shanghai. Started to rise more and more. And then it generated a fear of missing out over there and a mentality over in Asia. And that fund got a little bit crazy, started to drag silver up outside of China. And so as the market's rallying, the spreads widen, but it's dragging everyone and everything down. They shut down the fund. Markets crash. The fund gets shut down. It gets stopped. Complete chaos in that fund. I mean, we're talking pandemonium. We're talking, the end of the world over there. And that makes all the demand for silver drop, and it drops. But when it drops, the U.S. price dropped even more. And were there coordinated effects were going on after they saw that catalyst? We said it's a catalyst, not a reason. So the whole thing goes down, but the U.S. price drops even more. Now we think about this. The China price starts pulling away. That makes sense, because the China's price has a higher beta. It leads. But as we were dropping, shouldn't China's price drop more? It didn't. So you got to ask yourself the reason why it didn't, because China's demand is real with silver. That's what started this whole chaos happened. So you have a situation yesterday where you have a very wide market situation, even as the market's coming off, and now you have a battle. It's ridiculous. That fund was outright ridiculous, right? But you have a battle over who's going to set price. China's demand is real. The Western tranche is kind of some form of paper trading, right? We're going to go back to some analogies I went over, but stay with me. But I want everyone to understand and digest that. So, that's kind of what everyone was talking about. I'm going to get back into it in a quick second, but that's when we gave the analogy of the bungee, the anchor, the price over in Asia. We'll go over that in a second. But again, I want to get to something right here, and this is so important. I'm harping on this, and this is seriously important, right? JP Morgan says gold's violent sell-off was a reset. We agree with them, not a reversal, okay? Central banks are still buying tonnage with targets, okay? And investors are underallocated. They see a path towards 6,300 by year end of 2026. Okay. They think that's firmly intact with upside targets of 8,000 to 8,400. This isn't financial advice. This is just their opinion and my opinion. This is not financial advice before you consider that being overbought. That's significant, and legacy media is not reporting this for whatever reason. Okay. When you look at the difference in spreads from Shanghai and COMEX, they're massive. So the demand in Shanghai is still there, and that's what's pulling us higher, okay? I want to go back to the analogy that I said. Many of us understand the concept of the bungee, right? Shanghai is the bungee. It anchors everything in place. New York price drops, Shanghai pulls it back up, okay? I want you to remember that. So if you flip that, you're going to get Shanghai, New York relationship. Shanghai is the anchor on the bungee, as Shanghai is the tether, and it's where the bungee jumper is tethered to, and that's the value on the way down. If the tether is good, if the anchor is good, New York will drop more, and then New York will snap up and the spread will tighten. And then Shanghai will resume its rally, bringing in COMEX with it. And that's what you see right now. And if this breaks, if that relationship changes, if, for example, well, what do we worry about? Because you worry about that if the market were to seriously drop and that drops with it, well, then the anchor collapses. And you don't want to see that, because that's total pandemonium crashing, okay? You don't really want to see that. You want to see the bungee jumper firmly being tethered to the Shanghai demand, because if we lose this relationship, it becomes harder to navigate. I tell everyone, look, how we navigate, that's our compass, the spread, and what happens in Japan is the wind. So if we lose this relationship, the Shanghai tether and the bungee going up and down with COMEX, we're going to have to find out where we're going with that. So that's the way to read the spread if you're looking at these day-to-day, movements in everything, okay? That's the one thing to look at. We spoke about that in a previous video about going over that. Okay, that's what we're paying attention to. Ladies and gentlemen, and this is so important, and if you made it to this part, I thank you, because we're about to talk about some of the most important things. I don't feel saying the most important things at the beginning of a video trying to get more and more people to watch. The people who are fans of this channel, I thank you, and I welcome everyone here. And I'm welcoming everybody who's joining the Patreon who really wants to learn how to take advantage of these actionable intel situations we're talking about. It's one thing to hear me discuss about them. It's another thing to actually put it play to help people who want to learn. It's an amazing, it really, really is. But I'm here for the fans of this channel and our community in the Wolfpack. So when you make it this far and you comment, I know you're paying attention. Ladies and gentlemen, JP Morgan argues that last week's sharp rally sell-off, sharp gold rally and then sell-off reflects a momentum reset after an extreme rally, okay? And I want you to understand something. They've raised their year-end to 2026 gold price target to 6,300, citing persistent central bank accumulation and elastic demand tied to fixed tonnage goals. They have fixed tonnage goals, okay? Continued investor diversification into real assets. Silver, for them, by contrast, faces higher volatility and greater downside risk due to weaker structural support and emerging industrial substitution pressures. Now, these aren't empty words, ladies and gentlemen, okay? The inelastic demand in gold, we've talked about that for about a year to anyone who retains us. We're just talking about this now for about 4 or 5 months. It's really important to understand this, because you're all probably asking, what does that really mean, okay? And I'm telling you to do this, and this is what JP Morgan is in their professional way, and this is what they're saying. It's one thing for a central bank to buy gold with fiat currency. Oh, I have euros, I'm going to sell some euros and buy some gold with it. Oh, I have dollars, I'm going to sell some dollars and buy some gold with it. They're not doing that, ladies and gentlemen. Here's the most important thing. The central banks are maintaining their fiat portfolio and buying gold. Buying gold. Let this sink in. They're maintaining their fiat portfolio and buying gold. What does this mean, ladies and gentlemen? Ask yourself this question. Where are they getting the money to buy the gold? They're printing money to buy gold, ladies and gentlemen. They're printing money to buy gold. Well, you would say, what's our proof of that, right? Our proof is 2024, we started noticing that every quarter, India would buy the same amount of gold every quarter, no matter the price. $1,000, $2,000, $3,000, $4,000. They weren't buying price, ladies and gentlemen. They weren't budgeting for money. They weren't looking like, I only have X amount of dollars this week to buy for coffees. No. They were budgeting for gold. They knew how many ounces and tonnage they had to buy. So it didn't matter how much the cost. They just bought it. They were price insensitive. They're dollar inelastic. They're tons elastic. That means they're buying ounces with dollars. They're not spending dollars. Very quietly, they're revaluing their whole portfolio. So they're increasing their M2 supply. And it's their price engine's on. It's ton inelastic. So think about this. You have central banks printing money to buy gold. Media's not telling you that. crypto market's getting hit right now, right? I've been telling people over the phone, you know what? Cryptocurrency is like having a pet tiger. You love it until that tiger tries to eat you. But there's a reason of why. There's a reason of why. If they're printing money to buy gold, people in the crypto space were used to people buying cryptos and tech with printed money. You see the tech market getting blasted. AI is getting blasted. You see the Wall Street people who first got into Bitcoin getting their hands bitten right now. They're not used to this, what's happening, right? So as the money's being printed, and the secret, what you just heard from me, is getting out and spreading, and if you made it this far, I appreciate you. The money being printed right now is to buy gold. Anyone who retains our organization in capacity, anyone we work proxy for, has been following this for a long time. And if you're here, I salute you, because now you know you have a competitive edge. You have a competitive edge right now of anyone. Being a financial merchant, like I said before, is having these competitive edges, going into that combat every day, representing yourself and the people that you financially are representing for, and coming home with what you need alive. Because guess what? Trading, it's an occupation, it's a profession, like Jesse Livermore. You have to do it every day, every single day. So let that sink in. Let that sink in. They're printing money now to buy gold. That's price engine, tons inelastic, supply and time compression. What that means in English, the price engine, tons inelastic, supply and time compression. It's fancy speak for they're buying tons, not spending dollars, okay? They need to buy. Their demand is inelastic, which means they want it at any price, and the supply is inelastic. You can't just pump money, gold, like you can pump oil, okay? You can't just pump money, gold, like you can pump oil. Let that sink in. And time compression. They seem to be running out of time. That's our assessment of this, fixed tonnage targets rather than price sensitivity. It's like they have to get this in before something happens. So that's their way of saying they're printing money to buy gold, reinforcing an elastic buy even at higher prices. Investor allocations of gold has expanded meaningfully, but remains below historical saturation levels, leaving room for further diversification, okay, towards real assets. So, we've been saying this for a number of years, but again, I want to shift to silver for a second. Silver faces a greater volatility and downside risk due to the absence of central bank support and rising industrial substitution, while gold remains the primary structural beneficiary. Silver is more volatile. Silver will remain more volatile because central banks don't buy it. And guess what? Sovereign funds are buying it. And the proof is, if you were to look at the platinum, silver, and gold charts, look them up. I don't do charts here. I don't pull screens up and show you charts. That's not me. If you're looking for that, you're going to have to go to somewhere else. I don't do that. I don't have that trade craft. If you look at platinum and silver, gold charts, they're all doing the same thing, ladies and gentlemen. Someone is out there indexing all metals. They're indexing metals, buying them, whether it's a country, whether it's a sovereign wealth fund, whether it's proxy, whether it's an institutional investor. We don't care. All the metals are trading like a basket now. You have a basket for energy, right? You got a basket for energy. That they're used for indexing. Well, you're going to have a basket for metals. You heard this here. You're going to have a basket for metals that you're going to use for indexing. What's the price of gold? Well, the price of New York gold is here. The Shanghai price is over there. 80% of the volume is coming from Shanghai, so the price is 80% of Shanghai and 20% of New York. You're going to have an index created for metals. There's going to be a blend of global prices because you got to do it like in energy. You do it in oil. Ladies and gentlemen, China sets the silver price, okay? POTUS announced project, rare earth. I mean, look at the whole thing. The whole world is minerals right now, ladies and gentlemen. Let this sink in. The whole world is minerals right now. We're going to go over this real fast again. Rare earths. Watch rare earths. I've been watching mining and refining because I'm involved with this for the last 20 years. This is something I love. I understand this. I'm trying to take the PhD out of the PhD here for you guys. Watch these. We're going to find, listen, United States, with what POTUS just said, we're going to find rare earths. Watch. We're going to find them and we're going to get them. And once we get them, it will be China going, oh my Lord, how are we going to get our silver now? What are we going to do? Ladies and gentlemen, if you're still here, I appreciate you. On to the next, the AI war data centers. What did I say AI data centers was? It was a kilowatt war, okay? I told you silver transmits electricity faster than any other metal. The West is losing the kilowatt battle. China's eating our lunch. They use coal for electricity. Our grid cannot keep up. Again, in a previous video, we said the best way, and anyone who retains this, we've been talking about this, was nat gas. Nat gas is the answer, okay? Shales, okay? Shale. The best way for the West is to put data centers on top of natural gas, right? That was our opinion, for whatever reasons. The only person who seemed to be doing this in any capacity, again, this is not some endorsement, whatever. Kevin O'Leary, Mr. Wonderful, has some outstanding projects he's got going on doing this, okay? He's actually going to be taking centers with natural gas, with land. So I give him a salute. That's fantastic what this man's doing. Again, he's the only person who I've seen come out and actually talk about that. But we've been talking about this for a very, very long time. He actually has some monster projects going on with that. So this guy, well, that's why they call him Mr. Wonderful, because he's fantastic. But we're losing that because we don't have the infrastructure and no one else is doing that. It should be all over the news and it's not happening. And that's a problem, right? So you need energy. It's very energy intensive. Our grid can't handle it. If you put data centers on top of the shale basins, it'd be fantastic. I want to tie all this in right now. The whole world is waking up to three very important things and why XRP and HBAR and everything like this. Ladies and gentlemen, prices were probably going to go lower. This is not financial recommendation. This is only my opinion. It's not financial advice. Prices are probably going to go lower. You have to be very patient here right now. Remember, we're the remora swimming underneath all this. I talk about the Machiavellian proxies, what we're going on with that. There's proxies making maneuvers and doing things for people right now. You understand me? This is what's happening. They're not going to come out in the whole world and say they're printing money to buy gold. You just heard me tell you that that's what's going on. My proof is what I just said. That is an actual thing that we've been talking about to anyone who retains us any capacity. Again, in the Patreon, I'm going to be going all over this again. And I love helping people realize where they want to go and why. So when the banks are printing money right now, not to buy speculative assets, they're buying precious metals. That's going to push the price of precious metals higher. That's going to see money flow out of the crypto, money flow out of tech right now for a second until it finds its happy bottom, right? It's trading institutional right now. That's why I say things have to get passed. Let them get passed. Let it just be what it's going to become. That's most important. You keep pushing the ball forward. Never going to get a negotiation is 50-50. You get half of what you want. I get half of what I want. It's not you get 51% and I get 49%. That's robbery. Again, you got to stay frosty here right now. So again, the Treasury regime on the west side of the tranche is pushing back. And as far as I'm concerned, you see this right now. I expect a lot more things to come out and shake things out. But what you're seeing right now in the capital markets, as people catch on to that, they're printing money to buy gold and silver and other things right now, the fluff comes out of certain assets and sectors until it comes back in. So right now we're watching that. So wait for appropriate levels on the downside. Be overly cautious right now. No leverage. Do not get cut up like sushi. I need you to have that Gucci clarity right now because this march up this cold mountain, this frosty mountain with this frosty beverage is going on. Like I said, every day trading's a profession, right? So again, money's flowing out of that sector into metals. This sector will have its time on the bottom and more news will flow back into it, causing it to go higher. As the adoption of utility happens, you're going to see these things take off in time. This gives a perfect opportunity to bottom feed. I always told you, and this was taught to me, be greedy when people are afraid. There's blood in the streets. That's why we're the remora feasting. Ladies and gentlemen, when this stops right here, and this all started because what I said about China, the renminbi, gold becoming a collateralized asset to compete with treasuries. I have my own philosophy and feelings, which I'll share in the Patreon. I'm not going to share here why this is going on, but this all tells a story, right? And again, with copper, the metals right now have recovered, digested some stuff, but there's going to be talk like we told you last week when we covered with gold and now we're getting ready to go long again. I just want you to know that. Again, we took our tactical thing. And why I say we need these things to pass, we don't want a legal insurgency to come up and challenge what's being laid down today. We want to keep moving forward. We don't need any more lawsuits. Again, this is for the future. A lot more is at stake. But the main themes that you learn here right now, and the rest is going to be for part 3 because I can't get all this in. I'm trying right now. There's going to be 4 parts to this. You just learned right now the major thing to take about this. They're printing money to buy gold. You're not going to hear that said on the news right now. There's a lot more going on right now again. So I need you to think about this. Very, very few people who shaped the global financial system have had their eyes on XRP from the very start. They debated it. They tried to control it. They tried to slow it down. Yet here we are. This isn't hype. This isn't theory. It's documented influence at the highest level. And here's the crazy part. While retail investors panic, all the leverage is gone. Metals are quietly stabilizing, and XRP is holding its structure. You're watching history unfold. You're seeing a rare moment where everything aligns quietly. The system, the assets, the players behind the scenes. If you're still here, still paying attention, still thinking instead of reacting, you're already ahead of most people. Years from now, this period won't be remembered for panic. It'll be remembered as preparation. Stay patient, stay grounded, and above all, pay attention to what's quiet. Markets don't do this by accident. That's not noise, that's structure. You're part of it. You're witnessing it, and you'll look back one day and you'll know you understood what most people missed. Thank you for being here, liking, subscribing, and sharing. I appreciate every one of you. I love every one of you. Have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before. Remember, the game is changing. Those who understand it first will benefit the most. Make sure on the right side of it, you have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but ones that change everything, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the digital asset. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story, it's just the beginning. Just open your eyes, smash that like button, ring a bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all.